Hey guys, this is Market Update. In this video, we're going to look at some of the fundamentals of why panicking this week about a potential recession was not the play. It's been a crazy week. We had basically a 30% drawdown over a couple of days. And this week's candle, despite this huge drawdown in this wick here, is going to end the week green. So why is that? What's going on? And why is panicking about a potential recession not the play? Now, I understand if you have liability short term that you need dollars for, it's really important to understand what's going on, right? But you have to set up your portfolio so that you have long-term investments that don't have to get eaten into if something happens to your lifestyle, right? So it's important to look at central bank policy and what it's actually doing and why it is affecting Bitcoin to the upside over time, the best performing asset over the last 15 years, right? From 0 to 62,000 almost this week. So it's been a crazy week. We traded still within the range, a huge drawdown, massive panic, and then buyers are coming in and a green candle again. We're still in this range. To be honest, I don't really see anything that moves us out of this range short term because everything is so uncertain right now. Traders are probably waiting for the US election to be over and see what's happening there. So I just still think we're in this holding pattern of as long as things carry on a little bit, then nothing much is going to change. Now, many people are panicking about a potential recession, a spike in unemployment. Those things, are important to worry about short term, but ultimately lead to a higher Bitcoin price long term. I want to focus on that in this video because it's really important if you're looking to invest in Bitcoin. If you do trade Bitcoin, check out the Bybit deposit bonus down in the description, up to 30K if you make a deposit on there, $30,000 deposit bonus. Check the link for the details below. There was a lot of panic this week about a potential recession and higher unemployment and the yen carry trade blowing everything up, and none of that's come to pass, right? Essentially, the central banks are doing some shifting around here and it's creating volatility in markets for sure. And volatility short term is only a worry if you have fiat currency liabilities that need to be met short term and you don't have the fiat currency to meet them because it's tied up. That's about individual portfolio management at that point, that we have long-term investments in assets that can stand that volatility, and we have enough assets that can be liquidated or cash equivalents that can pay our bills short term. That's individual portfolio management. But the worry about recession is actually something that is kind of smoke and mirrors. And I want to explain that in this video because it's really important to understand the dynamic between what the market worries about, which is completely irrelevant, I think, and then what is actually happening, which is long-term currency debasement, which is the game of investing. Our real game that we're playing here is to protect ourselves from currency debasement that's happening. It's all here and it will never get talked about in the press, which is always looking at GDP and everything, all of these metrics which are totally made up and fake and don't represent anything real. This is the Atlanta Fed's nowcast for real GDP. So they're saying around 2.9%. So it's a forecast of GDP. And everyone's worried in the mainstream media about GDP falling. If GDP falls, it's a nightmare. Well, let's have a look at GDP, 2.9%. And this is the fiscal stimulus happening in the States. This is the US federal government spending money that they don't earn in tax. And as you can see, it's not a one-off thing. This happens every year. There is a deficit of $2 to $3 trillion, right, for debt creation that the government has to create to pour into the economy. So this is about 6 to 7% of GDP. So what I'm saying is, if this deficit was taken away and the US federal government only spent what they earn in tax, GDP would literally be negative double figures. The natural free market is to drive GDP lower. The GDP is only positive because of stimulus. That's worrying because if the stimulus disappears, all of our assets are going to drop by 90+% because they're the wrong price. The natural rate of the economy wants GDP to go negative. It is not naturally positive at this point in time in this economy. So stimulus pushes that higher. That's extremely worrying, and that's why markets are so fragile. Because without the stimulus, GDP would be negative, and everyone's assets would go down 90%, and there would be complete upheaval around the world. This is why it's not allowed to happen. This is why central banks are so active. Essentially, the government through fiscal stimulus or the central bank through monetary stimulus makes sure that GDP is positive. The thing that gets hit is the fiat currency every single time. In Argentina, Over the past 4 years, 98% inflation. So 90% loss in purchasing power. In the Turkish lira, we've got a 78% loss in purchasing power over 3 years. And in the States, the USD, the supply of USD has increased approximately 7% for the past century, which is a 99.9% loss in purchasing power. Wow. The useful life is 14 years for the USD, which is the best one. So what I'm saying is, worrying about GDP, which is a completely fake metric, is not relevant because the government or the central bank will manipulate it higher through currency debasement. And that's it. There is no recession. GDP going lower. GDP is a fake metric to look at. It's not wealth creation. Stimulus is par for the course. The real game in investing is currency debasement and how to protect from that over the long term. We know then that if GDP is soft, they will stimulate. That's actually what they're doing now. So to worry about a recession, right, we're actually in it because without that stimulus, GDP would be negative. And so the game here is just that they have to keep asset prices higher, 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 debasing the current debt out. That will never, ever change. The debt will never be paid off. That is not the game of the fiat currency system. The fiat currency system is a credit system. The only thing it can do is create more credit on top of the other credit. It does not pay itself off. That's not how it's designed. It literally cannot pay itself off. So in US dollars, about 7% currency debasement a year. That means with inflation and everything, I would say you're looking at, let's say, 7 to 10% a year. That is the base level that you have to achieve over the dollar in order to keep up, right? So if you've got dollars, if you've got an investment, it needs to be going up 7 to 10% a year just to kind of keep its head above water and not actually lose purchasing power. You can see here that these are the major asset classes. And if you look at the annualized returns between 2011 and 24, the vast majority of assets do not keep up with this. So of course, bonds aren't going to keep up with it because they're the actual mechanism by which debasement happens, paying less money than the inflation you create. We've got commodities here have actually gone negative, right? So commodities, no one stores commodities as value, and them getting cheaper is actually, I would say, a good thing, right? It means that innovation is happening and we're getting more out for less input. So the price has actually gone down despite currency debasement. So that's how good we are at getting things out of the ground these days. We've got cash here, which clearly isn't going to outperform high yield bonds, no way. US small caps are kind of keeping up. Preferred stocks, no way. And then you've got kind of the US stock market, which is typically seen as, you know, the place to put your money, right? So outperformance here. You've got the S&P, which is US large caps, around 13% here. So a couple of percent a year is actually what you're earning. When people say you may earn 10 to 12% in the S&P, you're actually earning like 2% in the S&P, right? Because you have to take away the currency debasement from that. The NASDAQ is improving that a little bit with around 18% annualized. But again, that's probably around 8% annualized. So they're decent returns. And then you've got Bitcoin here, which, you know, clearly just is in this massive growth and adoption phase, which is why it has this outperformance. So to outperform real currency debasement in the dollar, there's basically about 3 things you can invest in. Many people are worried about a potential growth scare or growth slowdown. What they're really worried about because of the financial media is GDP slowing down, unemployment going a little bit higher. There's actually 2 sides of the same thing right here. So the first one is, like I said, without stimulus, GDP would literally be double figures negative, right? So we're in that slowdown if you want to look at GDP, right? But GDP is not real wealth creation. GDP is a fake metric that is basically just controlled by how much stimulus there is. That's the lever that pulls, right? So what you're actually trading there is just government policy and stimulus. We know that it happens. The other side of this is that the free market is actually driving GDP down as well through real wealth creation. Real wealth creation is when humans invent ways to get more out of less. So they invent tools and machines and AI where you get more out of less. That's real wealth creation. Bitcoin comprises both of those things in. So we know that real wealth creation is actually driving the cost of things down. And that means that disinflates wages, disinflates prices. We can't let that happen because everything would collapse in terms of the pricing structures that we have and all the debt that we have. So we can't let that happen. So all we do is just pour more and more and more and more debt in as stimulus to keep prices higher. That's why the debt is going through the roof over and over and over again. You can't take it out because otherwise you get negative GDP and everything collapses. So the 7% per year currency debasement for the US dollar. Two things that are outperforming. Bitcoin, as people realize this and the conversation has shifted, and you have an invention that should be some sort of world asset, world capital, something like gold. And that's the size of the market is huge. We're talking about 10 to 50 trillion in terms of market size, and you're in a growth phase. So people are excited about that. And of course you have outperformance. The other outperformance here is the NASDAQ, the best performing of these assets, because it indexes the companies that are demonetizing labor the fastest. Technology companies that are demonetizing, everything that we used to do in terms of communication, right? So what are they doing? They're creating actual wealth, which is letting us do more, basically for free, communicating for free, sending messages for free. So all of the payments are going to them now instead of other people demonetizing labor. So the free market is actually trying to crash down, whereas stimulus is trying to push up. Stimulus is trying to essentially fight gravity, which is impossible. Bitcoin has two sides to it. The first thing is, if you want to debase a currency, go ahead, because it can price that in because it's a fixed supply asset. The second thing is, if you want to own BTC as a neutral currency and wait for other human beings to create wealth for you and to create things that you can use basically for free that improve your life, you can do that too. Those things will get cheaper for you because you're holding a currency that isn't getting debased. What I mean by that is you can buy a communications device, a phone for like $20, communicate with people. That's going to help your life and help you create a business for yourself or improve your economic standing as well. So wealth creation can be priced by Bitcoin and not fiat currency. And Bitcoin protects against fiat currency debasement as well because of it being a fixed supply asset, world capital versus debasing fiat currencies. So all this FUD about growth scares and recessions doesn't really make much sense to me, because without this stimulus right here, we would be in what they call a recession anyway, which is negative GDP. Now GDP, like I said, is not wealth creation. GDP is a fake metric that means nothing. So to say that GDP is negative is a bad thing, what does that even mean? What is a recession? Does it mean that people aren't going out and trying to create a better life for themselves and work and create wealth for themselves? No, it's literally just the fiat system and these fiat metrics that mean nothing. And this whole fiat system with this stimulus needs to be poured in to keep it positive. And if they want to take it out, it'll go negative. And then guess what happens? More money printing from the central bank. You can see down here, the unsustainable upward trajectory of deficits and debt argues for bipartisan solutions to improve the country's fiscal outlook. What does that even mean? If you take this away, you create negative GDP and the whole fiat system will crash. If you want to bring this down, actually in nominal terms, what you have to do then is go to the central bank. You have to create a little recession, tell everyone that's a bad thing, and then go to the central bank, and the central bank prints money again to buy this debt. Printing money is inflationary to asset prices, and we're in the same game over and over and over again, which is debasing currency. That is the game. So if you want to invest in real estate, you can do. You won't make any money from it like we've seen, but you arbitrage the difference between the rate of your interest on your leverage and the rate of currency debasement in the currency that you've taken the leverage. Equities are great. You can invest in the companies that are producing real wealth and getting asset flows and capital flows into them. So I've got no problem with equities. I was a stockbroker. Equities are great. Been used for a long time. But as we can see, the S&P and the NASDAQ, once you take out currency debasement, they're not producing that much, right? Maybe 2 to 8% a year. I mean, it's better than nothing, right? And you're certainly protecting yourself against currency debasement. Bitcoin is this tiny thing which has a huge growth phase going on right now and is outperforming those massively, but could potentially grow into this kind of world capital store of value type thing, which is important because, like these slides show, there's a lot of capital out there that is just long-term store of value that is put aside in something other than into equities, because equities have this problem of having to be valued based on their cash flows, and equities are risky. Most businesses will fail. In fact, all businesses will eventually fail because they'll get taken over by another business. And so that's why you have to invest in indices as well. I remember when a business being valued at $1 trillion was like this huge breakthrough. And now in the last few years, these businesses are valued at 2 and 3 trillion. They didn't create that much value in the last few years. It was currency debasement, which they're trying to price in. That's the game, and you have to concentrate in these monopolies. It's not great. Bitcoin, not a monopoly. There's a lot of advantages to it. That's why I think it's growing and it's in a growth phase right now. If you do trade, check out the deposit bonus on Bybit up to 30K in the description, and the crypto investor course. I'll link it down there as well. 300 videos on getting set up with crypto. I'm James, it's Money G. Cheers for watching, and I'll see you in the next one.